Are you dreaming of investing in real estate but worried that your budget of $1,000 or less will hold you back? You're not alone. Many people think that diving into real estate requires a fortune, but that's far from the truth. In this video, we're breaking down practical strategies that can help you get started without emptying your wallet. Whether you're looking to earn passive income or build long-term wealth, there are accessible options just waiting for you. Stay with us as we look into these great investment options, and trust me, you'll want to catch the bonus tip we have for you. Strategy 1. REITs, Real Estate Investment Trusts. Real Estate Investment Trusts, or REITs, offer a great chance for investors who want to get into the real estate market without the hassle of owning property. A REIT is basically a company that owns, operates, or finances income-producing real estate across different types of properties. When you invest in a REIT, you're not buying a physical property. Instead, you're purchasing shares in a collection of real estate assets, much like how you'd buy stocks in a business. One of the best things about REITs is how easy they are to access. You can start investing with as little as $100, making them a smart option for those who are new to investing or those looking to spread out their investments without needing a lot of money up front. Plus, REITs are known for giving regular dividend payments to their shareholders, which can create a steady income stream. This makes them especially appealing for investors who want to earn money passively, as the dividends are usually paid out every 3 months. Additionally, REITs focus on different areas of the real estate market, like residential, commercial, and industrial properties. This variety allows investors to pick REITs that match their financial goals and comfort level with risk, providing a good way to diversify their investment portfolios. For example, you could invest in a residential REIT that owns apartment buildings or a commercial REIT that manages shopping centers. This diversification can help reduce risks associated with changes in any single market area. A well-known figure who has effectively used real estate investment trusts, or REITs, as part of his investment strategy is Sam Zell. Often referred to as the grave dancer for his knack for buying distressed properties, Zell is a billionaire real estate investor and founder of Equity Group Investments. He is well recognized for his role in popularizing the REIT structure in the 1990s. Strategy number 2. Real estate crowdfunding. Real estate crowdfunding is an effective investment strategy that lets people invest in real estate projects without needing a lot of money. By using crowdfunding platforms, multiple investors can combine their funds to support various real estate initiatives, making it possible for almost anyone to get started. You can begin your journey in commercial real estate or other high-return projects with investments as low as $500. Platforms like Fundrise and CrowdStreet have changed the way people invest in real estate. These sites offer a variety of investment opportunities across the country, allowing you to explore projects from the comfort of your own home. Real estate crowdfunding opens doors to properties that might have seemed out of reach before, giving you access to exclusive deals that can provide impressive returns. By participating in these platforms, you not only diversify your investment portfolio, but also take advantage of a lively market that many investors might overlook. A well-known person who has used real estate crowdfunding is Barbara Corcoran, a famous real estate expert and investor best known for her role on the TV show Shark Tank. Barbara has talked about the benefits of real estate crowdfunding, especially as a way for everyday investors to get involved in real estate markets that were once mainly for wealthy individuals. She highlights how crowdfunding can make real estate investing accessible to more people, allowing them to start with smaller amounts of money and still invest in quality properties. Her support for real estate crowdfunding shows her commitment to helping others build wealth through smart investment choices. Strategy number 3. Fractional ownership. Fractional ownership is a smart way to invest that lets people buy a share of a property instead of the whole thing. This approach opens up opportunities to access nice real estate options like vacation homes and commercial buildings, while significantly lowering the financial burden usually associated with full ownership. It's a great choice for those who want to get involved in real estate without putting in a lot of money. One of the major benefits of fractional ownership is its affordability. With platforms like Arrived Homes, you can invest in rental properties for as little as $100. This means that anyone, no matter their financial situation, can own a piece of property. When you buy a share, you not only earn a portion of the rental income, but also have the chance to benefit from any increase in the property's value over time. This makes fractional ownership a good option for many investors. Additionally, fractional ownership allows you to spread out your investments in real estate. Instead of putting all your money into one property, you can invest in several different properties. This strategy helps reduce risk because you're not relying on just one property to perform well. If one investment doesn't do as well as expected, you still have other properties that can bring in income or go up in value. One well-known individual who has utilized fractional ownership in real estate is Kevin O'Leary, famously known as Mr. Wonderful from the television show Shark Tank. O'Leary is a successful entrepreneur and investor who has explored various investment strategies, including fractional ownership in real estate. Through his company, O'Leary Funds, he has shown interest in innovative investment models that provide access to real estate opportunities for everyday investors. O'Leary has spoken about the advantages of fractional ownership, highlighting how it allows individuals to invest in high-value properties without the need for substantial capital, making real estate more accessible. Bonus tip: use leverage to expand your real estate portfolio. A key strategy for growing your real estate portfolio is using borrowed money. Once you've built a foundation in real estate investing, you can take out low-interest loans to buy more properties. This approach lets you increase your holdings without using all your available cash. For example, by borrowing money at a lower interest rate, you can purchase more properties, which can lead to higher rental income and greater overall returns on your investments. However, while leverage can significantly boost your potential profits, it's important to manage the risks carefully. Borrowing too much, also known as over-leveraging, can put you in a tough financial spot, especially if property values go down or rental income drops. Therefore, it's crucial to assess your financial situation and the market before taking on more debt. By using leverage wisely, you can grow your portfolio while keeping a balanced and sustainable investment strategy. One well-known person who effectively uses leverage in real estate investing is Robert Kiyosaki, the author of the best-selling book Rich Dad, Poor Dad. Kiyosaki advocates for leveraging borrowed money to acquire investment properties, emphasizing that using other people's money can significantly increase your potential returns. Kiyosaki has built a successful portfolio of real estate investments, often sharing his strategies and insights on financial education and investing. He believes that leveraging real estate can create cash flow and long-term wealth, making it a key component of his financial philosophy. If you're ready to take the leap into real estate without breaking the bank, you now have some fantastic options at your fingertips. Whether you choose REITs, crowdfunding, or fractional ownership, there's a path for everyone. Remember, investing smartly can lead to exciting opportunities and financial freedom. Make sure to hit that subscribe button and don't miss our next video, 3 real estate hacks to get rich without owning property. It's packed with even more valuable insights you won't want to miss. Happy investing!